Hey traders, checking in on the stock market today. So another new all-time high, but we're still seeing the same pattern of profit taking out of our stronger names and smaller cap names over the last 2 days, and seeing that inflow back into some of our larger caps. Today it was Amazon and Netflix. Yesterday it was Amazon, Apple, Google, Facebook, and we're also going to look at what contained accumulation looks like on the charts. Hey there, swing traders. This is our first ever sale of the TCG swing report here for the end of the year. Click the link and I will put that in the top pinned comment of this YouTube video and enter the code NY21 for 21% off. Was $700 for the year and now it is $553, which is less than $50 a month. Appreciate your support. Let's get to the charts. So first, before we get into it, let's just quickly run through what I'm talking about in terms of where we're seeing this profit taking. We're looking at the solar sector, which has been extremely strong. High bear volume, 2 solid red days. We are looking at ARKG, which is your Genomic Revolution ETF. Obviously a massive shift going on there over the past couple of days. All of these names are going to be looking for weekly higher lows. They got a lot of space for the weekly higher lows, but it's just very clear daily profit taking. Even the US marijuana stock sector, this is the ETF with the most profit taking that we've seen in a very long time. So a little bit of risk off in the market. And then you see names like Amazon breaking out after trading sideways for 5 weeks. Microsoft was the same thing, breaking out now over the past 2 weeks after trading sideways. Of course, Apple up at the all-time high. Profit taking there today, but still very strong overall. And keeping an eye on the continuing shifting market environment. So SPY, gap up open to all-time highs into some profit taking. And we saw a little bit of weakness today, but again, we know what we need to see on our checklist for the bears to prove it to us. And they did not check off anything on that checklist today. Whether it was a dollar bounce, nope, not happening. Did oil break support? Nope, not happening. Did we ever see our 3 major sectors, healthcare, financial, or tech, at the low of the day at the same time? Very close, but it didn't happen. We had the healthcare sector in the first 30 minutes of trading holding well. And it was up at the high of the day while both QQQ and XLF were at the low of the day at the same time. So XLV was holding things together. Look when it started pulling back, 1025, and it dropped until 1115. Who stepped in and took control? 1025 to 1115. Here's 1010. And here's 11, QQQ took back over. And then QQQ held the market on its shoulders after the double bottom at the low of the day, and then another hold of the low of the day, and just not giving up. The bulls would just not roll over and give up, and that kept the broader market from dumping. And in the end, SPY closed down 0.19%, and it's one of the highest closes in the history of SPY. So close to seeing a couple check marks for the bears, but we didn't get any. I am in a bit of a hedge position in SPY. And it's a smaller position, but just protecting some of my longs in case we were to see some weakness. In the S&P 500 chart, we're now on the futures looking at a 4-hour higher low with plenty of space for it to form. And if the bears are going to prove anything to us, if we form this 4-hour higher low, we would then have to see a confirmed 4-hour downtrend for any notable bear follow-through. As long as we're seeing rotation going on, as long as money is not leaving the market, then the overall market stays strong. So SPY, hourly chart, anything under the high of today would just be an hourly lower high, and we would have to fail to break 374 and then drop down and break 370.83, the low of today, to confirm an hourly downtrend and confirm daily consolidation. And our line in the sand level is 362.03. If that level is holding, bulls have an uptrend on the daily time frame. NASDAQ 100 USD, again, 12-hour time frame. That falling wedge, rising wedge I should say, broke bull overnight. Now it wouldn't be surprising to see a bull break straight into a pullback, but that's just the way the market's been behaving in 2020. But we're back testing it at the moment and still holding it. So if the bulls can pull off a 4-hour bull flag here, hold the EMA 12, it's going to be a bull break above this rising wedge and a back test and hold. And just something to keep an eye on. I'm less concerned with the resistance line now, and I'll continue paying attention to the uptrending support line. IWM, seeing the same 2-day of profit taking. Average volume a bit higher, close at the low of the day. Bears controlling the entirety of the day, definitely in the category of sectors or markets that are seeing profit taking and risk off the last 2 days, and it's also been one of the strongest in the last 2 months. Again, that's the commonality between everything we're seeing. Really strong 2 months, weak past 2 days. So IWM daily higher low support is 191.48. Anything above that keeps the daily uptrend in control. Bulls want to change the hourly trend back in their favor for the daily higher low to be set, which means topping out on a bounce, holding the low, changing the hourly trend. And then from there, we would watch for the potential of a lower high. Look at the 4-hour chart here. And you can make the argument that even if 191.48 holds, it's then a potential head and shoulders that the bulls would need to be cautious of. QQQ, all-time high, gap up open. If the low of today breaks tomorrow, anything above 303.60 is a daily higher low, keeping the bulls in complete control. Healthcare. So again, healthcare held up in the morning, but it's the weekly time frame that I care about here. And if we're not breaking 113.27 resistance or 109.37 support, then I don't care what XLV is doing. As long as we're range bound, nothing's changing. Have to break one of those levels. The bulls have the uptrend in their favor, and a break of 113.27 would have us looking right back up at the all-time high. Financial sector pulling back today. Anything above 28.23 is a daily higher low. So bulls have space maintaining the daily uptrend. Biotech sector, look at that volume. That is the most significant bear volume we've seen in the biotech sector in months and months. I played an oversold bounce today in XBI, and it went all right, but we never changed the 5-minute trend. And I scaled in a little bit. I did exit a partial position to be able to remain comfortable, re-entered that position on a new low. And then as soon as we just failed to change the 5-minute trend, I stopped out of that position on this bear break. And the bulls never proved it to me. And again, if you look at what I talk about with the shifting market environment, biotech sector hit first hourly oversold conditions today from the all-time high, and its bounce was just not there like we've been seeing the last 2 months. I've made a lot of gains in the last 2 months, ending the year on a really good note because oversold bounces are my edge, and there's been beautiful oversold bounces all over the place. The last 2 days, it's been a little bit more tricky. So it's just, again, just a little red flag in my brain. Cautious, a little bit of a changing market environment. You can't just blindly trade the same way, the same setups the entirety of the time. And that's why I don't try and program a bot, because then you just have the market environment shift and the bot that I would have set up for oversold bounces would no longer be performing as it should. So I can either constantly be tweaking a bot that's trading for me, or I can just do what I enjoy and trade for myself, and I obviously choose the latter. So the biotech sector has lost some daily supports, but again, just as I pointed out, there is tons of space for a weekly higher low. We have not consolidated on the weekly in 2 months, and we're looking for a weekly higher low. SMH, real tight here, 210.41 key support, 217.49 is now our short-term resistance. Just tightening up. If we see a bear break, further weekly consolidation is coming. If we see a bull break, it's a potential weekly bull flag. Solar sector, again, profit taking, still just fine overall on the daily. No red flags here. We were overextended after 2 weeks of straight up with a higher low every single day for 10 days in a row. Zoom out. Plenty of space for a weekly higher low once we top out. And so what the bulls want to see in the broader market is money out of these names, rotation into large caps, and then maybe looking for weekly higher lows in all these names, rotation of money back into these names for those weekly higher lows. The VIX with the green day, anything under 31.50 is a lower high compared to that big quick spike that we saw. I personally, I've said it before, but I just don't care about the VIX at all. At all. It has never factored into anything that I've ever done in my life. If that's not the case for you, that's fine. But I just don't find any use. The dollar. So no follow through, bullish reversal candle yesterday. So check mark for the bears. Nope, that's a check mark for the bulls. Assets staying strong as long as the dollar stays weak. 89.73 key support. And if we do not break 91.02 and 91.24, the bulls prove absolutely nothing. Gold and silver are tightening up on the daily, so all I care about is the extremes of the range. I care about 1855 support and 1907 resistance. If neither of those levels are breaking, I don't care what gold's doing. And again, that's because I have a swing trade perspective in my longer term IRA position, but nothing is changing if we're within that range. And that range for silver is 24.95 and 27.41. So if I were day trading, obviously, if I were day trading the metals, I would care what's going on within these ranges because they're very wide ranges and there is opportunity within them. But just for me personally, with a swing trade mindset, don't care what happens within this range. If I were looking for a silver entry, I would want to see a lower high compared to 27.41, and I'd want to make an entry playing off of 24.95 support, looking for a tightening daily range, and then ideally making the entry and then leading to a bull break. Miners still fairly weak. Broke the low of yesterday, but no bear follow through, and just an hourly downtrend still. Bounced this morning, just an hourly lower high, and then drop down towards the low of the day. We would have to hold 35.59 and break 36.29 tomorrow to confirm an hourly trend change. Oil, daily inside bar today, inventory report tomorrow. If we get a bearish reaction, our daily lower high will be set, and we'll then be looking for a higher low compared to 46.16. If we get a bullish reaction, our daily lower high compared to 49.43 has not been set yet. Natural gas, yet again, 4-hour bear flag confirming an oversold condition marks the bottom. Bear flag, confirm, significant bounce. Where else has that happened? I'll tell you. It happened here. Bear flag confirmed into the bounce. Then it happened here. Bear flag confirmed into the bounce. And it happened here. Bear flag confirmed into the bounce. 4-hour time frame. Happened here. You get the idea. Natural gas, 4-hour bear flags. Ideally when already in so oversold conditions, so you can have some confidence that we're not going to see much more follow through. And that was this past example, but it's happening a lot. So daily inside bar today, if it breaks bullish, our daily bounce is underway. We'll then be focused on our most important daily resistance of 2772. And we'll look for a lower high compared to that level, at least initially, and we'll watch for this range to tighten up. And if we break bearish, then we're looking right back down at our low. Bulls obviously hoping for a bull break, which would be a daily bear break of support with zero follow through, which means keep an eye in the other direction as we're scouting a monthly higher low. So accumulation, contained accumulation, coming out of weakness and coming out of recent IPOs. So we'll start today with Fubo, which is what we were looking at yesterday at the end of the video, looking for a daily higher low to form. We ended up breaking the low of yesterday with little follow through. What I want to highlight is a 5-minute contained range. And you can just see it getting tighter and tighter. And then you reach a point where it's very clear. You get over 37 and the price drops right back to 37. You drop below 37, the price goes right back up to 37. Just pinned. And we had 15% at this point in time, 10 to 15% of the entire day's volume was traded in this range. Now it shows a number of things. When you're coming, again, the precedent is you're coming from a significant pullback. And FUBO has dropped significantly over the past few days, and there's also share unlocks overhanging, which is known news, which the market prices in to a certain degree, but you are extended to the downside, and then you trade flat sideways. You're seeing market makers pin the price, and you're either seeing contained short covering, probably both, significant short covering and significant building of a long position. And how that breaks that range is fast and hard. It's just getting really, really tight, just a rubber band, pulling it tighter, 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 and then just snaps into that bull break. Look at Dash. Dash has been dropping days and days. Recent IPO, all-time lows, 5-minute time frame, just stagnant. And I'm noticing it's usually around a psychological level. For Dash, it was 140. Just grind ton of volume in a tiny, tiny range, and then a 10-minute snap, mini short squeeze. No follow through, gave it all back, but it was there. And it reminds me of LAZR on December 14th. And on December 14th, we were pinned to 27. At this point in time, we had been pulling back 5-6 days in a row. Big drop. Pinned to 27. Snap, there's your bull break. Accumulation. Significant pullback for days and days. Pinned price in a very tight range where you don't get above that price significantly and you don't drop below that price significantly. And then you see that momentum shift. So I am in a swing position on FUBO. See how that goes. I've got a real nice break even. And I played that snap bull break. I attempted 2 trades there. And I entered. So I had an initial position playing the bounce from the morning. And my average was low 37s. And then I went 500% of a larger position and put my stop under 36.85. Because at that point in time, that was the lowest price that we'd seen in an hour. And I was looking for that snap bull break. And if I have a 500% larger position, then obviously it's a big, fast win. I stopped out on this drop right here. And then I saw the double bottom at 36.70 and said, that should have gave a little bit more wiggle room, but that's all right. So then I did, all right, I'll do the other opposite. I'll do a stop buy. The bulls can prove it, breaking resistance. I'll stop buy in. So I did the same thing with a very large position and then just constantly scaling out 1, 2, 3, 4 positions. I'm now left with 2 positions on the swing, and we need an hourly trend change. If we do not change the hourly trend, the bulls prove nothing to us. We must break $40 tomorrow. If we don't break $40 tomorrow, it's a red flag. If we do break $40, my target's going to be the upper 40s before we scout that daily lower high. And again, it's the same trade setup as LAZR. All-time highs, massive pullback. Same trade setup as Snow. All-time highs, massive pullback. It was still a nice bounce of 15%, not as significant. PLTR did it a while ago. All-time highs, significant pullback. 50% bounce. And we're hoping that FUBO can do the same. Hope you have a good day. Do good things, be well, and we'll see you tomorrow. We got some watermelon radish, named for obvious reasons. It's gonna go in some soup. Got some bone broth going. And we'll put a bunch of greens. And I actually got, from the summer, that's a bunch of root vegetables, carrots and beets, and zucchini. This is a good non-alcoholic carbonated tea. And that's my fridge. One of the best parts about Snow is tracking. So there's this line that I stepped on, but you can see 2 paws pretty far spaced out. That's a solid foot plus, maybe 14 inches from the back paws to the front paws. And then that tail line, very distinct. Tail dragging the whole way. And that's a little path that I've created just from walking back and forth. In there. So last year I did see a couple days where there was what looked like a mink. So it could be that. This is a little furry rodent that was swimming around the ponds. But he only stayed for a couple days and then moved on. Don't know what it could be. Muskrat. That's what I saw. It looks like a baby beaver. I'll keep an eye out.